In this video, we're going to take a look at the EUR USD and potentially why it's going to head towards 1.0. Before we get into the charts, if you appreciate all the up-to-date analysis that we provide here on the channel, please make sure to hit the like button and subscribe. Alright, so check this out. The EUR USD stands tall against a weaker US dollar after Fed Powell's shock. Now, what happened with the Fed is they came out and they said that inflation is no longer transitory. And then they also said that they're going to be raising rates in March. This was a complete shock to the market because the market was pricing in a 25 basis point rate hike in March. They were also saying that inflation is transitory. So, two major changes. The new dot plot now shows 3 rate hikes in 2022, which is up from the previous one. The new median projection for the federal funds rate is 50 basis points higher at 2.25% for 2022, which is also up from the previous 1.9%. And then the federal funds rate is now projected to rise above 3% in 2023. That's also up from the previous 2.1%. So basically, they're telling the markets that inflation is not transitory, and they're going to be raising rates faster than what the market expected. So, when we zoom out on the euro, we can see that it is indeed standing tall. It's at 1.097 right now. It did hit 1.10 earlier in the session. We can see that the momentum is up. We had a green dot at the low, red dot at the high. That's showing us bullish momentum. And then if we take a look at the RSI is above the 50 line, which tells us that the short-term momentum is indeed bullish. Now, if we take a look at some key levels, the 1.09 level was support turned resistance. We had a very strong move down to this level. We bounced off of it right here, right at this level. That was your key swing low during this move down. And then we have the 1.10 level, which is the previous resistance, now turned support. So, I think if you are long in the tooth, you feel comfortable with your risk-reward ratio. You don't need to set your stop-loss below the 1.09 level. I would just say if you're targeting 1.10, set your stop-loss right below that swing low at 1.087. That gives you about a 22 pip stop, maybe even a 20 pip stop. If you want to get fancy, you could even target 1.105. That would give you a 35 pip move. I think that's a bit too much to ask for, but hey, anything's possible.